So, welcome everyone to the second episode of Finery Markets podcast, The Flow, where we talk about the market structure in the crypto space with all the industry leaders. And today we have a special guest, Benjamin Stephens, who has the world's first centrally cleared, clearing counterparty, ClearToken. So Ben, happy to have you here. And please, maybe you can introduce yourself to our audience.
Well, thank you, Konstantin. Lovely to be here. Thank you for having us and thank you for having me. So yes, you're right. ClearToken is the first central counterparty for digital assets, looking to be regulated by the Bank of England and go live in the next 12 months or so in a phased process. So very happy to walk you through why we need a clearinghouse, what clearing really is, and how that impacts digital assets and crypto assets in particular.
Sounds great. So let's get this started. And we recorded our first podcast with Doug Atkin, the former CEO of Instinet. You also spent a significant time of your career within Instinet, which I think is actually like an alma mater of some of the talented industry experts and the leaders in the electronic trading space and like overall the capital markets. So can you tell me a bit more about like your background and how did you make this leap of faith and actually switching to the crypto side?
Well, you're right there. Internet's over 50 years old now, and I think we went through the sort of history, it went through its 50th birthday of how it had innovated in the market, what had changed. It was the first firm to do electronic trading. It ended up running an enormous exchange in the US, which spread to other venues all over the world. So the Chi-X brand, which is now part of SIBO. And with that, as you say, have come a lot of innovations, whether that was OTC trading or electronic trading or, I think we met there. I think you were a customer of mine a long time ago.
I guess it was like, 12 years ago. So yeah, time flies.
Something like that.
We should have bought some Bitcoin back then.
We were all doing sort of something similar, but, it primes you pretty well for this sort of market. Let's face it, digital assets are entirely electronic markets. And I guess it shouldn't be a surprise that people who've worked in businesses that have electronified trading of securities, find dealing in a fully electronic global 24/7 business, it's not straightforward, but it's not so much of a culture shock. So you ask, what about me? Well, I was working in prime brokerage and alongside the prime brokerage teams in clearing businesses for a long time. One of the businesses we built in Instinet in Europe was a clearing business, and we then started to look as a group. So as the Nomura Group and later Digital, which was the last part of the group I worked in. How do we enter the digital asset market? And alongside that came questions around how do you actually clear and settle digital assets? How are we practically going to settle large quantities of Bitcoin, Ethereum, or digital Vodafone, digital BMW, digital Apple on a Saturday and Sunday? And it became quite clear that those answers weren't already set. Yep. I think there are a lot of people who thought that was all done. We've invented the blockchain, everything's fine, right? And I think in our view, absolutely not. And I guess that's what we're here to discuss.
Exactly. And before we get into the weeds of that, so can you share a bit more about like why digital assets? Like your personal view and the background, like when was this epiphany moment for you when you decided to actually go and do some digital asset stuff? Is it something that, it's just your Instinet background which forces you to keep more innovation, bring more innovation into the space? Or like how did you decide to do that?
Well, I guess there's two parts to that. I think one of the things if you know Instinet, you know that it didn't stop innovating. And in my time there, I think we launched 2 MTFs. We launched a clearing business, and that was just in Europe. We acquired another GUI-based platform to do block trading. So sort of coming across all of these things. I also went through this market change in Europe called MiFID II, which suddenly led to a lot of bilateral trading, a lot of market makers making prices to brokers. So very similar, I guess, to what Finery is already doing, right? But this was how do we interact with this type of liquidity? And it's funny when I first heard about what you were doing, Konstantin. It's like, I remember that. I think we've seen that one before.
It's like having a time machine, right? You can do all the things right. and you have all the power and actually all the knowledge to do that. So it's great to bring some of the innovation, but actually keep innovating within the space. So
why digital assets? So I think there are a few things for me that I found attractive. I think I first learned about the sort of concept of an ICO, reading one of those dreaded sort of economist newspapers, who'd picked up that there were companies and ideas being funded in a way that was entirely novel, and that were not necessarily subject to securities laws. Now we can talk about that.
It will be a separate podcast, yeah.
But this was being done, and these companies were being funded to huge quantities. And there was a lot of excitement in a new way of being able to democratize and issue capital, and that was very hard to avoid as a thing, as a trend, and certainly it was hard for me to get my head around this idea that there could be a token that actually isn't a share. It's not debt. It's not the normal capital structure. It's something else. And that was very intriguing for me. It is something else. Now, as you said, it could be another podcast on what it actually is, but it clearly wasn't something that traded on the New York Stock Exchange or something similar to that. So that was interesting, number one. And then as you sort of dug into, well, why is it interesting? It became clear that this technology allows you to instantiate or create trust from nowhere. So if you could create trust from nowhere with just technology and blockchains, then potentially you could create trust more cheaply, at least, than we can do today with government databases. Yep. And once you start down that road and you start unpicking it, you start realizing, a lot of the things we can't do that we'd love to be able to do in finance are really cost-based. It's cost prohibitive. So was the blockchain and digital assets going to allow us, if it was done right, to unlock this sort of potential of, the way I tend to put it, assets that are currently held in PDFs.
Yeah.
Credit assets that are you're sitting on servers reflecting a pool of cars or loans. Could we make the system efficient enough to unlock what I think the studies now say are possibly $100 trillion of assets? And that for me is fascinating. And then the last bit was, this is global. This is the first time, so this is the first time that we have an asset that people can trade all over the world, and they can trade it 24/7. Now, you and I came from, really equity markets, right? And we're all very much used there to having European markets which are open longer than pretty much everywhere else. Yeah. But really, that was only 8 till 4 or 8 till 4:30 London time. That's 5 days a week. And you compare that now to these markets that are 24/7.
And extremely fragmented, which makes it like even way, way more complex. It is fungible, but extremely fragmented. But also fungible to the extent of like the blockchain, right? And now we have all the different blockchains. But anyway, we'll talk about that in a second.
Podcast.
In a second, exactly. All right. So when we initially planned the podcast a few weeks ago, we actually didn't know the news. So I think the timing is like exactly right for this one. Congrats on your recent round, which is like a decent 10 million round. So with the backing from the Laser Digital and the industry leading players, can you share a bit like more color? How is this backing impacting ClearToken's future, and what are your next plans? So what was the main proceeds for that round?
Yeah, absolutely. Well, thank you. It's been great to have that sort of not just recognition, but full backing by our users. So I think the most important thing to say first is that ClearToken is not a token. It's not it's not a token issue.
But it does clear.
But it does clear tokens. So there we
exactly.
are. Where we've been trying to go and is the same sort of path that a lot of other clearinghouses in traditional finance have gone, which is to be fundamentally user-owned and user-backed. Clearinghouses allow the management of risk within the market. They allow counterparties who would otherwise compete to settle and deal with each other. And that's the main sort of function, is to de-risk the complexity of the market by standing in between buyers and sellers as that central counterparty, becoming the buyer to the seller and the seller to the buyer, and then settling transactions off the back of that. So having an exchange future members in trading firms. Actually, we have a prime broker and we have custodians as our anchor investors, means that from day one we have what the VC guys would call the initial atomic network to get ourselves going, and that's really exciting because that means operationally we know we can make things work.
Sounds great.
After that, we only have to solve the regulation, but I mean that's
That's
a
an
big
interesting
thing. But at least we know operationally we'll be able to go live.
Sounds great. Well, congrats once again. So now let's talk about the market structure, and this is the main topic of all of our podcasts. I would probably start with I think the whole game changed around FTX. This was the massive moment of, once again, epiphany for the industry that probably something is not right in the industry. I guess a lot of the traditional finance veterans that were entering the space, they were praying for that before the FTX, but when this whole thing happened, when it collapsed, I see the industry is realizing that it should be debundled, and that is probably the trend that's happening right now, like separation of the clearing, safekeeping, execution functions. So do you see the same trend? So do you see this debundling, or how do you see this whole industry bundling or debundling will be happening within the next 2 years?
It's interesting, right? And it I think strikes at the heart of how does digital assets operate? What are they practically? And you can think of this at several levels. I think many will think about it philosophically or commercially. Isn't it better to have everything together? Or philosophically, these are separate functions that should be be separated out. You can think about it through a regulatory lens, and to be honest, that's a lot of the way we think about things. Come back to that in a second. Or you can think about it from an operational point of view and where the market's actually going. So, if we just start there, we are seeing a lot of demand for the separation of custody from execution. That's definitely there, and I'm not going to say a fully done deal across the whole industry, but we see a lot of exchanges now looking to allow other custodians to come in and provide services. And that's really driven by what you would call the buy-side customers. There's more sophisticated institutional investors that are coming to the market and saying, look, we need a custodian that we choose, or more to the point, we need more than one custodian so we can diversify our risk. And that's definitely happening. I think at the top end, if we talk about execution venues, well, there's 600 venues, so I think we can say that.
Just officially, yeah. I guess this way more than that we probably never heard of.
Yeah, so that's still there. That's pretty unbundled. I think when I was working in the securities markets, we had the concept of, in Europe, it was MiFID in 2007, which was the first time national markets in Europe could have more than one venue to trade an asset on. So before that happened, if you were in Germany, the only place you could trade BMW was on the German stock exchange. You couldn't even trade it OTC, right? So that unbundling was
pretty easy, right? And simple, yeah.
But then there's the regulatory side, and if you are happy to accept, and of course we are, that the vast majority, if not every digital asset, is going to become a financial instrument, then you need to start following the legislation that applies to financial instruments. So, I'm sitting in the UK. This is great. We're in a UK podcast today. ClearToken is a UK-based firm, so we are subject to all of the European laws that have applied for a long time that were imported into the UK post-Brexit. Yep. So we have our own version here of what's called EMIR, so European Markets in Infrastructure Regulation, and that governs clearinghouses, and we are a clearinghouse. So the question is, well, if you're doing that, does that regulation, that law apply to you? Does that apply to ClearToken? Well, it does if the asset is considered a financial instrument. And where the UK government, through the Treasury, has come out through its various consultations, is that all forms of crypto asset are a thing. So that was a change made last year, and that we're going to see all forms of crypto asset become financial instruments or specified investments under what's called the Regulated Activities Order. So for us, it's regulated. Now, that's a long way of saying, well, there's regulation that applies. And guess what? Under EMEA, you have to have a clearinghouse as a separate entity to a custodian or a depository or an exchange. Right. And exchanges under that under UK law are actually regulated in a separate way and must be separate again in general from broker dealers. And principal market makers, people trading on their own book, they must be separate again from exchange operators. Now, there's nothing to stop you as a bank, for example, offering custody, execution, brokerage, prime brokerage, all of those sort of customer businesses with the appropriate segregation internally, can be offered as services, to some extent bundled from an economic point of view, but that sits in that broker dealer. What's separate though is if you're running an actual exchange, a regulated exchange, or you're running a clearinghouse or a depository, those are separate entities. So I think that regulatory change means, to your point about unbundling, well, it's an inevitability now. It's happening operationally, right? To your point about
you
FTX
agree,
is coming.
yeah. So you agree this is happening.
It's happening. Practically, it's actually happening.
And I guess the other trend on top of the unbundling is actually even more fragmentation in the space, because with local regulation, we'll see the appearance of some of the local execution venues and probably some of the local players that will need to be locally regulated. So yeah, we'll see. I think it's an interesting time to see how this industry emerges from really like more of a Wild West like 5-7 years ago to a proper institutional standards, which will need to adjust to like the 24/7 nature of a fully like globally traded asset class, which is pretty exciting. Back to where we started.
It's a tough ask, and I think for a lot of firms, there's going to be a realization, to your point, that if you are dealing with retail investors in particular, you're going to have a local entity that's regulated in that jurisdiction you're dealing with those customers. And as you say, your customers though are global, so you're going to have to think about how you onboard them and geofence them. Definitely. For us though, we are institutional only type of business. We deal with other businesses. And I hope that as we get recognized as a clearinghouse, we'll actually, as a result of that, be recognized by regulators all over the world and should be able to deal with the vast majority of firms that actually operate on your platform, no matter where they're based, but as long as they're based in a jurisdiction that recognizes us, we'll be able to deal with them.
All right, so let's... Now we have identified some of these like key functions of this unbundling, right? The execution part, the safekeeping, the clearing part. Let's talk about the clearing and ClearToken in particular. And there's a lot of misusage of the world, like prime brokerage and clearing in the space. So can you bring some light into that of like what is the actual function of a clearing house, or basically like the clearing central counterparty, and how is it different from a prime broker, for example?
Sure. Well, why don't we just start with what is clearing, right? We often see that in the website, on the websites of different firms saying, "Oh, we do clearing." Some of them even provide software that does clearing. It's not actually the physical function. So clearing is very simply, when clearing with a small c, the process from when you and I agree a transaction to the point at which it's finally settled. Right? That time span, be that a millisecond, or if it's a derivative, it could be a year, that whole process in between is the clearing process. So what does a clearing house do? A clearinghouse takes in transactions from a buyer and a seller. So if you and I, Konstantin, execute an agreement, we do a bargain, we would give up that trade to a clearinghouse. We give up that transaction. We call that novation. So the clearinghouse becomes our legal counterparties. So instead of it being you versus me, right, it's me versus the clearinghouse, me versus ClearToken, you versus ClearToken. And what that means is you don't bear my credit risk. The clearinghouse does. So the next question is, well, how does it manage that credit risk? But from your and I perspective, we get a few benefits. We get no longer to face one another, but we also get any other transactions that we've done with other counterparties put into the same net, put into the same obligation against the clearinghouse. So I think about your venue where, as let's say as a liquidity taker, as a buy-side participant, you might have 20, 30 counterparties that you trade with. Suddenly, by having a clearinghouse there, you have one counterparty to deal with.
And this is decent improvement because we started as a bilateral, like a purely bilateral venue for the OTC trading. And we started in 2019. So we survived the FTX, and we saw that actually the week this was happening, all the bilateral credit lines like shrinked in a second.
Yeah.
Especially like, and we see that history happening around like 2008. And I was lucky enough to work with Knight Capital and MF Global as my as my brokers. So I remember all of these bumps that happens on the road, and the role of a CCP, I think, cannot be underestimated. And the trust that it can bring to the industry, I think that will be the game changer for the space.
So yeah, let's look at that for a second. So, in the crisis when Lehman went under, I was in the equities market, working for another broker dealer, fortunately, but we had a lot of exposure to Lehman. But the exposure was the OTC trades, as you say. Anything that was an exposure to Lehman via a clearinghouse was settled and closed. Right? In fact, I'm not aware of any clearinghouse who lost any money on the Lehman bankruptcy. Everything was closed out. Where the money was lost was in the OTC transactions. And actually, that's what caused, post the crisis, a view of regulators to move as much business as possible onto clearinghouses. So you may have heard of Dodd-Frank in the US, and in Europe it was EMIR, that have actually mandated the movement of a lot of derivatives onto clearinghouses. Interestingly enough, spot assets were generally cleared because it was more efficient to put them through a clearinghouse. So this is well-trodden ground. So then the question is, once you've cleared it, so we're now going to risk manage it, how does that work? So as a clearinghouse, we're regulated as that central counterparty, ensure we have enough capital, and more importantly, that our members have enough capital. And our members need to post margin and post to a default fund. And when they post margin, that covers the initial risk, but they also have to post additional margin based on the price and fluctuation, or the fluctuation in price of the positions they have with us. So, going back to that point about settlement or how long it takes to clear a trade, if you're transacting in Bitcoin and you decide to settle 1 day later, then the clearinghouse is going to take on that risk for a day, right? And yes, the price of Bitcoin could move during that time. So margin needs to be posted continuously to cover that. But what it means is when we come to settle, there is very little chance that one of the counterparties has disappeared.
Yeah.
Now, let's just contrast that to where we are today. If you want to settle Bitcoin today against, let's say, US dollars move in one system, Bitcoin moves on another system. We know it moves on the blockchain. How do you tie those two transactions together? Right. At the moment, unless you have someone else doing it for you, someone like us, you're doing what we would call in traditional finance a free of payment movement. That is, Bitcoin goes in one direction, and then at a later time,
Hopefully,
the dollars come back the other way. Or maybe you sent the dollars first, and then hopefully the Bitcoin came back the other way, right? And of course, dollars can take a day, 2 days to settle. Bitcoin, as we all know, is instantaneous. Right? So how do you make those two things to come together? And at its most basic, the first thing that ClearToken will do and solve and go live with is making sure those delivery versus payments, so no longer two individual movements, now one movement goes through us. And the way we do that is enshrined in our rulebook, and it's enshrined, actually that rulebook is enshrined in the articles of the company that operates this, and it's protected in the end as we get authorized and recognized by the central bank by recognition that this is a system that has what we call settlement finality. And that's very important. Going back to, don't want to pick on the regulation, but once crypto assets are all what are called specified investments, we expect them all to have settlement finality. So that means if you and I enter a transaction into ClearToken, you can be sure that it will never be unpicked. Right? As long as it's settled, it will never be unpicked. And that's really important for big institutions to know that when they've done a transaction, it'll settle. So that's what ClearToken does. You asked an interesting question. So how are we different to a prime broker? What's a prime broker? Right. So first thing to note is that prime brokers, on the face of it, might do something similar to a clearinghouse. They manage risk for their customers. They actually do clear transactions for customers. Right? That's absolutely right. But they often do that and generally do that as a member of a clearinghouse. So where we sit is in between multiple prime brokers or multiple banks and allow those firms to settle with one another. Right? Because why is it different, today for two prime brokers settling with each other to a buy side and a market maker? In reality, it's not that different. The risk isn't that different. So we help them ameliorate their risk, net down their risk. And what a prime broker does is it provides its balance sheet to us, so it protects us as a clearinghouse from their customers, aggregates their customers' business together. And of course, what they also do, which is not a function of us as a clearinghouse, is they finance their customers' transactions, right? So they might lend them money, they might lend them assets, right? And they might provide leverage. That's not what we do, right? So the prime broker is very, very important participants in the ecosystem, very important to us, but very different in terms of the way they're regulated.
Sounds great. Thanks. And I think this is quite important for like all the industry participants while the industry emerges to know and they understand all the bits and pieces of the infrastructure that is emerging in the space. And I remember when we first started in 2019, being like we've been the world's first crypto native ECN for fully electronic OTC. And back in the days, there was not a lot of industry experts from the traditional markets. And even the concept of OTC 5 years ago in crypto was more of a trading via chat or voice. And just bringing some of the best practices like a proper clearing venue or just a non-custodial execution, this, I think, makes the whole industry way more stable, reputable, and hopefully brings us into the completely new level of the market structure. So we are proud participants of your proof of concept. And you did a great job of consolidating the market around the proof of concept. So can you tell us a bit more about the next steps in your evolution and basically the next steps within the proof of concept within the ClearToken?
Yes, absolutely. And thank you for all the help. It was very important as we proved out the sort of business case and the rationale in the market for ClearToken to bring in as many different voices and as many different types of industry participants as possible. So, we were lucky enough to have venues, whether those are actual exchanges or OTC venues like your own, or market makers who make prices bilaterally entirely, alongside our expected membership, be those prime brokers or actual brokers, and of course custodians. So, as I said at the beginning, we were lucky, or we've done really well to have an investor base that will allow us to go live. And really, where we're taking things from here is putting live our technology. So we have a great technology provider. We should have our entire infrastructure up in the next few weeks, actually, where we will be taking in trades in our UAT environment and flushing through the pipe. So running the risk models, developing the risk models, providing the connectivity to our members, with a view to going live, hopefully towards the beginning of the second half of this year with our first product, which will be settlement netting. So that's what we're striving towards. And then as the regulation comes through, we'll look to go live with the actual clearinghouse with margin. So at the moment, there's a lot of work to do, as you said, to deal with the standards across the entire vertical of the industry. In some ways, it's quite easy to connect to a great firm like Finery. You've got great APIs. You've got very organized data. At the exchange level, as you say, you've learned from how to do things in traditional markets. It couldn't be more simple, to be honest with you. On the other hand, once we start coming down into the clearing space, now we have to move to 24/7. Right. Now that's different. We have to think about fractional settlement of assets. And your traditional clearinghouses, we don't do fractional settlement. We do a whole share, right? That's okay, or one derivative. So that's a change that we've been needing to learn to make. But that's nothing on the change of 24/7 collateral or 24/7 settlement. And bringing that working system together with what are effectively traditional finance firms that are acting in a new industry and have updated their software. That's a little bit of a challenge. Obviously, we have some crypto native members who have built 24/7 systems from scratch, which is great. But still, there's that work to do. So what we'll be going through is, what are the norms we want to work on as an industry? And I'm not sure if you have it for a later question, but something we can talk about is, we have basic questions that we're dealing with on how frequently should we settle.
Yeah.
How do we manage that? What's the model that we can best learn from in traditional markets and apply them? And I'll happily say traditional markets, because there's a lot of learning being done over the last 150 years of clearinghouses being in existence. A lot of the ways in which things have been done are truly based on legacy technology and the limits of legacy technology. Yeah. And we don't want to be hamstrung by those. Blockchain's 24/7.
Exactly, and there's no such thing as a clearing session in the industry space right now, and there is no such thing as like an open and a closing of a trading session, which also makes it way more complex and challenging, and that's a really interesting challenge
let's
to
take
solve.
that. As you say, we're used to growing up in equity market. Yeah. It closes at 4 p.m, 4:30, and then you settle those trades 2 days later. If you're watching this in the future, the US will be settling those in 1 day in the future.
Yeah.
But
which is already causing like a massive burden on the industry, like to rebuild all the legacy systems to support just 1 day migration, and we're not talking about literally like T0 settlement that's by default happening in the crypto space.
Yeah. And look, why would we go backwards from what the crypto space has already figured out, which is what we can do this quickly? So we do want to make sure that we get the advantages for the market of minimizing the amount of capital tied up with us, minimizing the period where there's a risk. But at the same time, you've got to try and make sure you can cater to firms that may need 2 days to settle. Right. And that's where being able to manage risk, being able to have procedures for dealing with failed settlement is really important. And that's why we have a rule book. And ultimately, that's why you need a clearinghouse, is to create those standards across the market. So that's a lot of what we're working with on our early participants is, how frequently would you like to settle? I think we're going to settle on, excuse the pun, probably a concept of a session that might be 3 times a day, but the systems will settle every hour. And if the participants would like to settle every hour, that'll be supported.
And as you know, we're a big fan of that, like, because this frequent settlement windows actually allows way more flexibility and way more use cases, not only within the trading space, but also within the money remittance and all the other use cases that are covered by the digital assets.
Well, actually, when you come onto that, I would say we're not going to limit things in the end at every hour. It's very important, I think, to your point on money remittance, that things are as instantaneous as possible, and we will absolutely get there for certain flows. There's no question about that.
Sounds great. Looking forward to that, and we touched the market fragmentation a few times today. So literally, with a few hundred exchanges that are operating with like separated central limit order books, how do you see the role of the clearing and the ClearToken itself with bringing all of these fragmented pieces together? And a second question is, in general, how do you see the OTC and the on-exchange markets will emerge, considering this fragmentation and the clearing challenges in the space?
Yeah. People asked this question back with MiFID II. Before that happened, they asked this question with a regulation called Reg NMS, so National Market System in the US, when that came in the late 90s, early 2000s. What's going to happen? How's this going to work? I think the last time I answered this question was around equities in Europe, and I said, look, equities in general, they're going to look like FX. Everyone said, what are you talking about? Like, FX is kind of, got central limit order books. You can do RFQ, you can do voice. There's request for stream type platforms. And here we are in digital assets and crypto, and we have central limit order books. We have voice systems that you described, and then there's Finery in the middle. I think there is no right or wrong way of trading like that. What there is a demand for different liquidity profiles depending on who you are. If the most important thing for you right now is to transact a small amount of business at the best price, there is no exception, no better way of doing it without exception than a central limit order book. Yep. That's what you need to do. But of course, once your size gets above, the top of that book or a few layers down, well, you're going to start really impacting the market. And maybe if your counterparty knew who you were, they'd make you a better price.
Yeah.
Right? And that's where OTC streaming venues like yours really come into their own. Right? But of course, now we've got many order books, I guess is the way you might describe your system. Obviously, it's not an exchange, but you've got many rooms, I think. Do you say that? Many
exactly.
rooms?
Yes.
Right. Many rooms where your customers can meet and agree a transaction without necessarily seeing what everybody else is doing. Right? And that allows them to fine-tune the prices they make, know who their counterparties are, make better prices. On the other hand, you're still going to need, if you want to execute, I don't know, $100 million block, $1 billion block, you're going to need to be able to either send an RFQ or pick up the phone and do that. That need is not going to change, right? And the difference between a $1,000 or $2,000 order on a central limit order book, I guess, what's your average trade size? 50?
It depends, 50K, 100K, sometimes like a few mil a click. So yeah,
exactly. That's not going to change, and clearly the need to execute very large blocks is not going to change.
Yep.
So the challenge is how do you aggregate and merge those? And I think that's where it's kind of useful to know how that works in other markets, and we can draw the parallel. Probably the easier ones to understand is the U.S. equity market or the FX market. In both of those markets, let's just take U.S. equities. U.S. equities is about 85 venues, all cleared by one clearinghouse. But OTC trades are also cleared by that clearinghouse. And that's exactly what we expect to do. So you'll be able to come into us either on a trade-by-trade basis, and that could be on any venue that participates as a trade feed for us. So as long as the members of that venue are also our participants, whether through a prime broker or directly, then we'll be able to clear all those trades real-time, every single transaction. Same with a Finery, every single transaction you can come in. But if you want to negotiate a bilateral trade, we'll also take those, and those can be given up to us. Some of those transactions, customers will want margin and risk management. Others, they may just want to do the DVP through us, and that's absolutely fine. Yeah. They want to continue to take the credit risk, but make sure that we ensure that one doesn't walk off with the money, right? And that's an important part of just the general clearing process. There's no one size fits all, but in general, the highest volume will probably go through the sort of centrally cleared gross trade feeds, just like the US exchanges.
Yeah, makes perfect sense. And I guess most of these local exchanges might become might pivot into something more of a brokerage model, and through the prime brokers will be able to become your participants, once again, either directly or via the network of the PBs, which I think will be just bringing way more stability in the space. So
yeah, absolutely right. And we're already seeing banks starting to participate. So we are lucky to have Nomura through Laser Digital and Standard Chartered through its subsidiary Zodia as participants in our in the market or in the clearinghouse and in the cap table. There will be more and more banks that are doing this, right? And we are in many ways I wouldn't say the gateway for the banks, but it's very important for them to not have that bilateral credit risk, particularly for their regulatory capital sort of charges. I agree absolutely with your analysis of where some of the existing firms or marketplaces that serve retail are likely to go. Many of those will probably onshore themselves, maybe with different entities all over the world that face retail. Right? And we've got good models for that. Keep picking on the US, but someone like a firm like Robinhood is a really good model, or a Plus 500,
yep.
A really good model for what a retail brokerage looks like. It's a completely different business to the one you and I are in, but I agree with you. Those types of firms will likely come into the clearinghouse through either a prime broker or sponsored by a bank. Maybe some of them come directly.
I think it's great to bring some clarity here. So there's no actual competition directly, right, between yourselves and the PBs. I think there's a perfect synergy there, which we can bring to the industry and enjoy the growth together. And you mentioned a few challenges, right? You talked about DVP, which I think is a major challenge today. It's not only because we have the digital assets that settle on blockchain, and most of the trades, or a big portion of the trades, are happening against the fiat, which settles off-chain. So that by itself does not allow a proper DVP. And then to complicate things, you have multiple fiats. You have different blockchains that you need to combine and settle. So can you share a bit more how ClearToken is positioned to address these challenges with introducing the proper DVP into the space?
Yeah, sure. I think the first place to start is, you didn't mention stablecoins, but let's mention those as well.
Yes.
There are other payment mechanisms which of course are stablecoins an asset, not a fiat currency, but that's often used to settle as well. And that gets even more complex because you might have something like Circles, USDC, on the Ethereum blockchain, but also on the Solana blockchain.
Polygon,
are those
Tron,
fungible?
yeah.
pick your chain. Are those fungible? I think maybe there was a view some time ago that there might be one blockchain to rule them all, right? and everything would go on one blockchain. And I guess that would sort of eat at the heart of the concept of decentralized finance. It's kind of a little bit difficult. We are not here to pick any winners, right? So we are very happy for there to be, a plethora of venues, plethora of blockchains. That's for the market to deal with. What's important to us is that as those chains become popular, or the assets that are represented as tokens on them, whether those are securities or they are shares or they're native tokens to those blockchains, doesn't really matter. We need to be able to clear and settle those and have access to those. So our process is to make sure that we have relationships with custodians who can access those blockchains. So it's really for the custodians to deal with that on our behalf, and where we ask our participants to deal with us on this basis is to say, look, you have an obligation, let's say in USDC on Solana, you need to settle that. That's it. That's all you've got to do, right? We're not here to tell you should settle the Ethereum version. You settle the one you've told us you would like to settle. And it's very similar, you recall from our, going back to share trading days, there were ADRs in America which represented, a share that was from the UK or from Europe. Or you might have an ETF trading and it would settle, the same ETF could settle in London or Paris or in Euroclear. And what we would do is we'd say, well, all those are just different depots or different settlement lines, right? And we trade them. We knew we were trading the different line, and then we'd have to settle them. We can help with some of the fungibility, but at the end of the day, that's another transaction for people. So we are very happy for there to be any number of assets on any number of chains. It's just onboarding them and getting the custodian setting them up. And of course, from a system point of view, we then make that DVP happen, right? So from a process point of view, we're ensuring once you've delivered your asset, which has to be delivered in the right place, we make sure that we take control of that asset, take control of the other side, whether that's fiat or another asset, and then transfer the ownership. And during that transfer process, there's no ability to double spend, there's no ability to move away, right? And then the asset's delivered into your custodial account, right? And that is the true settlement process, and that gives you settlement finality, and that's how we actually do the DVP itself.
And I have even one more question on that topic is, crypto is almost instant, right? Depending on the blockchain, we can consider it T0 almost instant. But the banking rails in the US, this is going migration from T+2 to T+1, but we even have such thing as the banking days and the working days, which does not really make it not a 24/7 and definitely not an instant settlement. So how do you plan to reconcile that, and how do you see the industry in general will be able to reconcile the differences within the old world and the fiat rails and the 24/7 nature of the blockchain?
So it's a tricky one, but there are traditional answers to that question, many of which actually can work today, and we will apply today. And then there are longer term ways in which this will get solved. So as a financial market infrastructure regulated under EMIR and also regulated under what are called the Prudential Financial Market Infrastructure provisions by OSCO, so we are really there on the regulation side. It's better for us to use what we call central bank money. So in general, we will want to settle transactions in central bank money. As you rightly point out, though, most central banks today, all of them, are only operational from 8 till 4, so on weekdays. So how do we deal with that? I guess the first bit of good news is that there are other players in the market that are starting to run 24/7 central bank money-based systems. So, someone like Finery, also in the UK, recently did a big fund round and have got their license as a payment system. We should be able to use firms like that to settle those transactions 24/7. Other options, of course, are stablecoins. Another option is our own accounts at central banks, where we might be able to use a similar process to
CBDCs
or a CBDC. Exactly that, right? So those are coming. In the more immediate term, though, we can facilitate settlement in a currency where we have a bank account, and that's us holding and operating a bank account at a commercial bank. The downside for the market in that is that bank account needs to be pre-funded before close on a Friday night. Otherwise, there's no assets in there. But that's why a clearinghouse really helps. So, going back to, well, you'd like to do the settlement 24/7, but what if you can't? What if your business is not able to do that? Well, that's okay. We risk manage that position, we margin that position, and we make sure that during the period that you're not able to settle it, we're margining that effectively.
And for that, we need the money market, and which is, I think, a topic for another podcast as well, which, all right, can be a great challenge to solve within the space. So you mentioned Finality, and there are like some other players in the CCP space within the traditional space, and basically CCP is a business which is quite hard to enter due to the barriers of the regulatory barrier and the capital barrier and the balance sheet that you need to bear. So how do you see the competitive landscape within the crypto CCP? Do you see yourself as the only CCP within the next few years? And
well, there's what we might like to see and what's really there. Let's spend a second on the sort of historical clearing sort of house landscape. I think if you go back to the beginning of this century, let's go back to the 2000s. Really, all you had was securities markets, so generally equities, but sometimes fixed income being cleared. And you had derivatives markets being cleared. We all know the household names in the derivatives markets. That is the CME, Eurex, ICE, LCH for actually now interest rate swaps. Those are in general vertical systems where you have an exchange that runs an order book, and then you have a clearinghouse that provides the clearing for the derivative. And of course, if we think about, just sticking with crypto assets, Bitcoin futures or Ethereum futures, we already have the CME and Eurex, and I think LCHSA offering, those sorts of contracts. That is pretty plain vanilla business for a clearinghouse, if you like. Those are cash settled, and they're really good. Right, that works. It doesn't deal with the spot side of things, right? Those contracts don't have to trade 24/7. They're really used mostly by traditional market participants, and they're used to clearing those. So if we come onto the spot market, well, it looks a lot more like the securities markets, right? It's not really like the derivative market, and so far we've not seen many players look to try and enter that space. One of the main reasons for that is that, well, there's two real reasons in my mind for that. One is horizontal clearing tends to work better. That is, many venues, one clearinghouse, as we've seen in the example I was giving for US equity markets. And the other reason is there hasn't been certainty around the world of how these assets are treated. I think the common refrain that there's regulatory uncertainty around crypto assets in many countries is true, particularly when it comes to clearing and financial market infrastructures. That is not to in any way speak ill of the processes that are there around MiCA, for example. But MiCA in the European Union deals with crypto assets, if you like, in its own piece of legislation. If I contrast that to the way the UK government is going, and we're very happy to partner with our regulators here and the Treasury and Parliament, they have chosen to do something different. They have chosen to treat crypto assets as another type of financial instrument. Same risk, same regulation. No special, unique regulation for crypto. It's the same as any other financial instrument. Of course, that when it comes to retail, and it comes to marketing to retail, it will be regulated in the same way as many of the sort of spread betting firms are in the UK. That's not changing. And I know there's been a lot of talk on that side, but on the wholesale side, what matters to us is the legal certainty, and we think by the end of next year, by the end of 2025, so we're in March 2024 at the moment, we will have complete legal certainty in the UK around those assets. So for financial market infrastructure like us, that's really what's going to change things. So that's a long way of saying, yeah, we think people could come in and compete, but you're going to need to do that in a jurisdiction that recognizes these assets front to back and has courts where you can enforce that. And there really aren't too many of those in the world today. So, we'd expect firms to come in.
Luckily for you,
This is, as far as we can tell, the best jurisdiction from a legal and regulatory point of view to operate a clearinghouse and a financial market infrastructure for these, for digital assets. And I'm pretty sure the UK government wants to hear that. So that's they have my vote of confidence.
Sounds great. Looking forward to that. So, wrapping up, what do you think are the key milestones for ClearToken within the next couple of years? And maybe you also want to address some of our listeners, because I think we'll have a pretty broad audience with maybe there are some evolving prime brokers that don't know you yet, and maybe you want to address something for them as well.
Look, the key milestones for us are fundamentally delivering our technology infrastructure. As a financial market infrastructure, we have a very strong obligation for operational resiliency. That means ensuring that we have systems that run 24/7, that run in an expected way, that we're able to update them, that we're able to communicate with our members. That in itself is a lot of work, and that's why going live, even in the UAT and testing environment phase, and working with firms like yourselves is really important. This is not something you can just turn on and pray it works. It has to work. It has to work every single time, every transaction, and we'll be talking millions and millions of transactions a day, if not an hour, eventually, right? So that's just got to work all the time. So that's sort of key milestone number one. Go putting those systems out, making sure they're resilient, making sure we can connect with our customers. Milestone number two is the initial network of participants. I think by the end of this year, we will have a good number of household names in terms of venues connected, a good number of household names in terms of custodians connected. So providing real breadth of choice in the execution side of things, whether that's the request for stream type venue of yours, or whether that's a central limit order book, or that's the ability to just trade OTC. We'll have good choice, I think, along those. And those venues are all really going to be institutional focused. We will obviously be dealing with some of the more crypto native exchanges that are themselves being regulated, that have the view that they want to face institutions onshore. Of course, we're really looking forward to working with them. We have a few of those lined up. Beyond LMAX is one of our investors, to come in and do that. But by far the most important milestones will be on the regulatory side of things. So there we have great engagement from our regulators. We very much hope to be in a position to be recognized as a clearinghouse, fully able to take margin within 2025. And that'll be the point at which, when we're going live there, beyond the settlement model and into the truly cleared and margined business, that will start changing things for a lot of participants. That getting DVP done is really important. That's a sort of first must be done. Without that, things are difficult. By running a true clearinghouse and providing the netting, we will see, I would predict we'll see volumes on those venues that are connected go up 5-10 times, maybe more than that. Just to leave you with a little snippet of how things can go. US equity markets are very high volume. They today trade around $2.1 trillion. I think we said in our white paper. So a little plug for our white paper. It's on our website. I'm sure we'll put it in the link below this.
Will do. Yep.
We talk about the size of that market. Now that's every day. what's really interesting to us as a clearinghouse is that that's all done and netted down and settled in something like $40 billion. We're talking about more than 99% compression.
Yeah.
It's
impressive,
unbelievable, right? And that's the efficiency that a clearinghouse brings. Compare that to trying to settle all of those trades gross, right? And that's where you would be if you try to settle fully funded without a clearinghouse. Can you imagine how much capital you need to settle $2.1 trillion? And that ultimately is where digital assets are today, right? They're in that same place. Without a clearinghouse, you're going to have to fund everything. And if you haven't funded it, you're funding it through a credit line and taking credit risk. And if you take anything away from what does ClearToken do, it means that you're not on a credit line anymore. You're not having to fund something up front. You're not having to take a risk that you don't necessarily want to take on a counterparty. And that shouldn't be taken the wrong way. If you buy and sell, you think you have no position. If one of those entities disappears, you no longer bought or sold, right? And suddenly you have a market position, right? And that's the worst place to be for most financial market participants,
especially with the volatility of crypto. This is
you really don't want to be there. So for our initial participants, the real utility that we end up providing is that ability to net and know that you no longer have a position. Right, that's probably the most important thing we'll bring, a lot of those initial participants. No longer having to worry about whether they are zero. No, they are actually at zero. There's no question about that.
And we're really excited, like being also part of the proof of concept, the working group. We really see the benefit. We see the client demand for that, and we really see how that brings the efficiency, the capital efficiency, the trust in the space. And with these two, I think the whole industry should flourish. So yeah, excited to be here with you. And I think for all of our guests and listeners, we were able to share some basic information on the clearing side, and then hopefully our listeners enjoyed a more detailed discussion on all the challenges of DVP that ClearToken is going to solve for the industry. So thanks
who could have thought market structure could be so interesting? Thank you so much for having us. It's very kind of you.
Thank you, Benjamin. And it was Konstantin Shulga, CEO, co-founder of the leading crypto ECN. And please subscribe to our podcast, The Flow. We're present on YouTube, Spotify, and a few other platforms. And also, please do read the ClearToken white paper that will be added as a link to this podcast. And see you on the next episodes. Thank you.